The last time that we spoke, you were cautious. Since then, some water has flown under the bridge. But if anything, the geopolitical situation has become even more tense. And while people are only looking at Israel, Hamas, at the other end, what's happening in the South China Sea, Russia, etc., all of that is starting out to become a bit of a pot boiler. What's your sense on risk assets thereof? Are you even more cautious than what you were the last time?
Well, I think if I was to look at it from the weather analogy, I think we have an orange alert. We are not in the red alert zone yet. But I think we are getting there. I think there is the interesting thing, Neeraj, you would have seen is that there are a lot of people, big fund managers, calling out for cautious around the world, being defensive, saying that look, S&P and Nasdaq and emerging market stocks have run way ahead. In an environment where the yields, short-term and long-term in US are rising and are at multi-decade high now, and they're not stopping. So every time they get softer, again there is something that takes them to a higher level. So looking at that construct, it is difficult to definitely be aggressive, and I think we continue to hold our defensive stance as far as the portfolio is concerned. And what is happening around us, I think there is a large set of investors who still believe that they can exercise their put on the Fed, which means the Fed will at some point of time come in and bail out the markets by cutting rates. My worry is that that is not probably going to work this time, because this time there are no buyers or very few buyers of the bonds or the debt that US government issues. Look at China. China has been selling its holding of US treasuries. A lot of emerging market countries are selling the US bonds. Yeah. So absolutely. So I think that is what is happening, that in that environment, even if Fed was to cut rates or call a stop, I think the cost of capital for Fed will keep going up. So in an environment like that, the only bright spot would be earnings. We're just into the earnings season. I would say so far so good. IT has disappointed. But other than that, will be good for investors to be cautious over the earnings season and see where the opportunities are and have some cash in the portfolio.